Hello, it's June 15th, 2016. Today we're going to take a look at the S&P. Market is in a bear trend acceleration market state, and what's typical of this state is the market just starts to cascade and keeps very aggressive negative structure. Sentiment is above the market, and in this structure it's typical that the market does not have the same amount of energy if structure was lower. And here we would anticipate the market to really stay below the directional and just start to get pressed. So here is the price map levels plotted on the daily chart, and we can see the market has traded above the directional and it's making a play for the upside pivot. So the market's in a hedge theme. So we're in a corrective hedge theme, so we're in a buy DIR breakout strategy theme, and it's targeting the 2077.5 level with the potential to run the market all the way up to 2092.25. I want to see what the VIX is doing, and the VIX is in a neutral digestive market state, but sentiment is below the market. So we've got sentiment way below the market, and currently the VIX is pressing its downside pivot at 2020. We're following the July VIX futures contract. So we're either looking for a reversal here off 2020 or to see the market get pressed down to 19.25, which would be a buying opportunity in the VIX. So here we have the daily S&P, the daily VIX, the 5-minute VIX, and the 5-minute S&P, and we can see that the VIX is here pressing the downside pivot. S&P is reacting off this directional, so we're in this hedge theme. It's more of a corrective hedge theme, so let's just watch this positive structure, see what happens up at the 2077.5 level. Look for some confluence. Maybe we're going to get that at 1990. Definitely at 19.25. If the VIX starts to really cascade over, we could see a spike in the S&P. Maybe we get them up to the 2082 75 CRX plus. It doesn't look like this confluence will get the market up to the R level, but what we're looking for here is an exhaustive sell signal. You know, we still have this negative momentum, and we're definitely breaking that momentum, but this is kind of a, in the ebbs and flows, we're getting a pullback to these lows, this breaking point, looking for an exhaustive signal here, and seeing if we can get some confluence with that when the VIX is pressing lower at the 19.25 level. If this rally starts to fall apart here and we get more of a rotational day, so if this is going to develop, we're going to just stall out here at the CR plus and rotate back down to the CR minus in kind of a sideways digestive action. That would be more negative. The directional in both these markets, 2067 in the S&P and 2095 in the July VIX. If the S&P starts to rotate below 2067 and holds negative price structure, we need to jump on that, especially if we're getting that confluence with the VIX at 2095. And we're anticipating this negative momentum to re-engage, and if it does re-engage, we could see a move back down to, let's say, the 2048 level, getting some new move lows here, even as low as 2038. So VIX is still positive above 19.25, so that's more of a kind of a risk-on situation above here. Definitely we get back above the directional, that starts to really increase the heat there. And with the S&P, this is a kind of a corrective rally against the sentiment bias, and we're looking for that exhaustive signal to come in somewhere around 2077.5, or maybe up at the 82.75 area. Even as high as 92.25, back up into this pocket here, but you're looking for that event, that exhaustive event. Any questions, please feel free to contact me at info@jsservices.com. Good luck.